a landmark election in Turkey, political turmoil in Venezuela. What does it mean for your emerging market investments? Stephane Mayor, we've seen Venezuela in the news quite a lot in the last few days and weeks. Would you still recommend investments in that country?
The situation in Venezuela is quite interesting, I would say now. Venezuela have always been characterized by its willingness to pay, and then they did it until recently. Last bond was repaid last week. It was important. But now the situation has changed. I think there is some uncertainties on future political change, and probability of credit event is increasing. So I would say we can still be invested in the long end or middle end of the curve in Venezuela to look for bonds with a low cash value, because these bonds have a very low downside risk for me, and even there is a credit event, the recovery value could be not too far for the current value, so it makes sense to be invest in this part of the curve, but on a very, I would say, cautious way, not to be put a big bet on such uncertainties.
What happens if there is a change in leadership in Venezuela as Maduro comes under more pressure?
The risk is that the new government can go forward for a restructuring process. It was not the case with the Maduro administration, and this can change the mind of investor.
So is that the reason that you would stay in it with a very minimal investment, or what sort of bet would you look at in Venezuela?
Yeah, I'm happy to have most of my allocation redeemed last week, because it was something we were looking for. So a short end of the curve, there was a lot of value in it. But now with all these uncertainties, I prefer to be a small investment. We have still high coupons, interesting to be in, but not to be too loaded.
What about Turkey is another country which we've been seeing in the news an enormous amount, and of course with the recent election. Has anything changed in terms of the attractivity of Turkish bonds, either corporate or sovereign paper?
Yes, there is a lot of news around the last 2 years about on Turkey, and it changed the situation of Turkish assets, I would say. Turkish bonds was very expensive before. It was not so interesting to be invested in, because yield to maturity was very low. And after all the political noise around Erdogan and the political landscape change in Turkey, assets become more attractive, and so we decided to put a feet on it, a toes on it, just to be invested in Turkey. It's not so attractive, but it's more attractive than before. So it's, in terms of diversification, it makes sense to be in.
Is Erdogan a threat at all to the corporate bond market?
The factor of Erdogan, not really for the bond market. Even the more power change in end, or more presidential power for Erdogan will not change for me the structure of the risk of the bond market in Turkey. We stay in a defensive position, more bank or big holding company in Turkey, and it will not change the situation of these bonds.
What about overall in some of these emerging markets? What are kind of the larger factors that investors need to think about before they make investments in places like these?
Large factor undermine the investor in the emerging market as, I would say, there are three major factors. First is the commodities. For sure, everybody is looking at emerging market like a commodity producer, so evolution of commodity is very important. Evolution of dollar as well. If the dollar is too strong, is damageable for emerging market assets. And interest rate in US is also a very important point. If there is sudden hike in monetary policy in US, could be disturbing for emerging market, I would say.
Excellent. So attractive, but a few cautionary words.
Sure, yeah.
Thank you very much, Stephane Mayor, for those very interesting views on emerging markets.
You're welcome. Thank you.
And that was FinNews TV in cooperation with Dukascopy TV. Please join us next time.